The S&P 500 is reaching more downside price targets, and it's still extremely oversold due for a dead cat bounce. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today's SPY was down 0.14%, but intraday it was a very volatile day, and we did gap down below the lower Bollinger Band, very close to our price target at 380. When you get this far overextended to the downside and outside the lower Bollinger Band, it is very difficult to continue lower, so there is no surprise that we're starting to see a bounce from here. Now remember, below 393 was the breakdown below the 200 daily moving average, which is the risk-off environment, and we clearly had price rejecting from below the 200 daily moving average on Friday. So below 393, we were looking to come down to our lower price target around 380, and as of today, we were very close to hitting that level, so there is the possibility we're due for a bounce. If you just look at SPY, it's getting very overextended to the downside, and we're getting very high volume days, and SPY is really suffering from a lot of the banking sector being sold off because the financials is so heavily weighted in the S&P 500. So on SPY, you have this full trading range this week between 380 up to 390, and in order to get bullish, we need to reverse this downtrend of lower highs and lower lows, so you should be expecting a downtrend until price action proves otherwise. Now, if we do lose support at 380, we have the next target lower around 377, and if we break all of that support, we're taking out the December lows, and we're likely going to see a full liquidation event all the way back to the October lows, which could take us down into the 350s. I'm not calling for that to happen, but that is likely where we're going if price action proves it by breaking down through this low in the 370s. So the 370s all the way up to about 380 is very critical support. Below 393 and 393 remains the critical resistance. Above 393, the bulls are starting to take back over control and reversing this downtrend, and they will need to prove it with the price action of higher lows and higher highs. So continue to expect a downtrend until price action proves otherwise. On the NASDAQ 100 triple Qs, we were up 0.74% today, and the triple Qs did close back over the 200 daily moving average at 290, and remember, the triple Qs do not have the bank sector selling off. So relative strength is obviously going to be in the tech sector while the financial sector is seeing all of this volatility, and on the triple Qs, you want to watch this trading range between 286 and 294. We hit the full range with today's volatility on extremely high volume, and the bulls did show up at that support at 286, even though we were not overextended to the downside. So high volume buying off of support can carry over into tomorrow, but you want to manage your risk from 286 and 290, and you can get a lot more bullish if we break resistance at 294. Above 294, we need to retest the high at 300, and then above 300, we have the bull breakout. If we break down below 286, we'll be looking for the next targets lower at 280, and then the gap fill at 273. On the Dow Jones, we were down 0.28% today, and the Dow Jones continues to sell off with the third day in a row below the 200 daily moving average. And remember, below the 200 daily moving average, we're likely filling the gap at 311, so we likely do have more downside coming. The bulls need to break over 324 and then 327 to start reversing this downtrend, but we are looking for the possibility of a lower high because of the downtrend from the resistance between 324 and 327, and then a rejection from there can take us down to fill the gap at 311. On the Russell 2000 IWM ETF, we were down 1.63% today on very high volume, and we are a mile below the daily Bollinger Band for the third day in a row with a huge gap to fill all the way up here at 181. This is obviously capitulation on high volume selling, and we are getting way too far overextended to the downside, but that doesn't mean anything if there's crisis hitting the market and these stocks continue to sell off. So watch this support down here right around 170 to 171. If we break that, it's a flush back down to the October lows, but if we start to get the dead cat bounce, we're looking for resistance at 177 and the gap fill at 181. The bulls need to break back over 181 to get back over that 200 daily moving average and start reversing this full-blown capitulation event. Also keep in mind, we've gone over capitulation before, and typically speaking, you do get V-shaped recovery, so eventually this is going to turn the corner and likely start coming back up into the 180s. There's no guarantee when, so just because I drew this shape doesn't mean it has to happen at 170, but once we do turn that corner and start bouncing, we're likely going to go higher very quickly. On the ARKK ETF, we were up 2.67% today, so a lot of relative strength in the ARK ETF, and we are back above this support zone at 36.8. Keep in mind, this is still a downtrend of lower highs and lower lows while we're trading below 39, and the bulls need to get all the way back above 41 to get the higher high. Below 37, we could get rejected from resistance and still hit our price targets down here at 34.6 and the gap fill right around 32. On the VIX, we were up 6.94% as the VIX continues to climb into the mid to high 20s, and we did hit VIX levels of 30 yet again. again, but we continue to see the VIX crushing when we get that far overextended. VIX above 20 and definitely VIX above 24 is a very volatile market, and that's why you're seeing such huge swings intraday. On Bitcoin, we're currently up about 9%, with Bitcoin back up to the daily high zone between 24 to 25,000, and Bitcoin is getting a very impulsive bounce off of the 200 daily moving average, and this is a very risk-on asset. With Bitcoin getting such a strong impulsive bounce, there's a very good chance risk-on sentiment is still out there, and as long as Bitcoin is now trading above 22,500, you can buy the dip on it. This is obviously a bullish impulse after a correction to the last bullish impulse, so for all we know, Bitcoin is about to break out and start running to 30,000. On Google stock, we were up 0.53% as Google is fighting to hold this support at the bottom of the channel right around 90.5. If Google breaks down and gets rejected from the resistance at the negatively sloping 20 daily moving average around 92.7, it is possible to revisit the lows at 89 and then 86. If we break 86, we're going to a brand new low right around 83, but there is the possibility this channel bottom low around 90.5 holds up and we could start getting a bounce back up towards 95.6. On Amazon stock, we were up 1.87% today as Amazon finally filled that gap down here at $90 and instantly found buyers and came right back up to the resistance right around 94. This is still a downtrend as long as we're below 98 and we have strong resistance between 94 and 96. So there is going to be the possibility we still get rejected from a lower high and come down to fill the gap at 86. Below 86, we retest the lows at 82, and we're getting a lot more bullish if we could start breaking above 98 and 102, and we do have a price target at 109. On Microsoft stock, we're up 2.14%, and Microsoft had a very bullish engulfing candle, and we are back above this resistance at 252, but we are finding sellers at the negatively sloping 20 daily moving average around 255. We're instantly getting bullish if we can break above 255 to 256 for the gap fill at 262, but keep in mind there is the possibility this is still a lower high rejection as long as we're trading below 257, which means there's still the possibility we're coming down towards 242. On Nvidia stock, we were flat on the day, going absolutely nowhere, and we closed right on top of critical support at 227. You can see we're starting to lose the support trend line, but we're still at support at 227. And if we lose this support, we can start trending lower to fill the gap at 211. The bulls need to get all the way back above 244 to fully close that gap above at 258. So you're instantly getting a lot more bullish if we can get back above this support trend line and break that resistance in the 240s. On Tesla stock, we were up 0.6% as Tesla did get to bounce off of that support at 167 and close back over support at 173. As you can tell, this is mostly just a dead cat bounce because we were way too far overextended to the downside and below that daily Bollinger Band. So do not think this is bullish. This is simply a bounce from support back up towards resistance, and we need to get back over 183 and 197 before we say the bulls are gaining traction. There's a huge gap to fill down here right around 146, and with the current downtrend, there's a very good chance we're going down there to fill that gap. On Apple stock, we were up 1.33%, again with a bullish candle where we completely engulfed Friday's candle, but we did see sellers above resistance at 151, and this is still possible. This is a lower high rejection before we come down and fill the gap at 146. There is plenty of support on Apple between 145 all the way up to about 148, so do not be surprised if Apple goes much of nowhere and continues to ping pong between support and resistance. We're getting more bullish above 151 for a retest of 156, and then above 156, we can start marching higher into the 160s. On the financial sector, we were down 3.95% today as we have more trouble in paradise in the banking sector, and the financials are coming all the way down towards critical support at 31.2. We have high volume selling yet again, and we have a huge gap to fill to the upside at 32.5, and we're 3 days below the 200 daily moving average and developing a strong bear trend. The industrial sector was down 0.57% today, continuing to sell off after double topping and breaking down below the neckline at 100, which means we're very likely coming down to the rising 200 daily moving average at 95. The healthcare sector was up 0.93% today with a bullish engulfing candle, but we're obviously finding sellers below the negatively sloping 13 EMA and that resistance zone around 127. This is still a bear trend below 130, and we need to start breaking back over 129 to get the higher high and reverse the downtrend. The energy sector was down 2.03% today, breaking our support at 82.6, which meant we're going for the next leg lower at 80.5. If we continue to sell off from here, we do have a gap to fill down here right around 73, so keep that in mind that we could still be going much lower, especially if we break this support at 80.5. So jumping back over to the S&P 500, this is going to be a very critical week because we have CPI data tomorrow and PPI data on Wednesday, and there is obviously a lot of volatility going on around the financial sector with a lot of these banks that continue to sell off. Manage your risk below the 200 daily moving average. This is still a risk-off market, and if you're buying at support, make sure you're selling at resistance. And if you're shorting this market, just remember volatility does work in both directions, so you still need to manage your risk and cover if we break above resistance. Let the price action do all of the talking, and make sure you're trading with the direction of the trend, and you're going to have a much smoother ride in this market. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, you can come join us over at the Stocks Channel Trading Discord community. I also have a trade alert service called Bank Trade Alerts that sends you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.